Welcome back. You're watching Market Fatafat on ET now, keeping it going with all the stocks that are buzzing in trade on the back of news flows and technicals. And on the technicals now, we do have Aditya Arora joining in with us as well. Aditya, very good afternoon, and thank you so much for joining in with us. Let me start with the first stock that you picked out for us, Sri Renuka Sugar. The sugar pack surely is something that has been trending. You suddenly see sharp spikes up coming in here, but what are the charts indicating for this?
Very good afternoon. Absolutely, sugar space is surely buzzing, and we are seeing traction across the board. Whether we talk about the large caps or the FNO counters, non-FNO counters, there is activity across the board, and good volume is supporting the action. So I think one can, have bullish bias in these counters. There's more steam left on the upside.
All right. That's Sri Renuka Sugars buzzing in trade. But moving on to the other counter, that is Cipla, that is in focus today because Cipla said it will invest an additional 3 million euros in German-based Ethris that's developing potential therapies against respiratory diseases based on its proprietary mRNA technology platform. Now, this additional investment through a convertible loan will accelerate Cipla's participation in the mRNA space. In fact, Cipla had earlier also signed a definitive agreement to invest 15 million euros in Ethris GmbH, and this is the second investment. And on the back of that, Cipla is in focus today. But right now, we see a bit of a profit taking coming in on Cipla, trading with cuts of 1% there.
That is Cipla for y'all. Surely keeping an eye out on that one. We also yesterday at the event, Ankita managed to speak to Umang Vora as well. So we did get in some bit of an insight on that in terms of what their strategy is going forward. But yes, okay, we'll move on to the next stock that is in focus then, and Sincera Engineering, that's the one we're keeping an eye out on. One more block deal that we are seeing there, where around 57 lakh shares have been sold by the company. 5 block deals is what has happened. 10.7% is what this is at. The stake is at, as well as, when you look at it, what we understand from sources that the foreign VC client Ebene has sold was to sell around 11.66%, but this morning we've only seen around 10% of the stake which has been sold so far. Let's wait out for more details. Who are the buyers of this is something interesting that we're going to be keeping an eye out on. But Sincera Engineering is managing to hold on to good gains as of now. 10.7% equity change of hands that has happened so far. Waiting and keeping an eye out on the buyers and any further stake sale by the seller that we are expecting there.
All right, moving on. Jinay, you have picked out Alco beverage stocks like United Spirits and Radico Khaitan for us. Tell us, we did see a note coming out from Antique. Tell us, what is the note saying?
So Antique came up with an sectoral note on the alcohol beverages index, and they've picked United Spirits and Radico Khaitan as the key stock picks. Now we'll talk about United Spirits first. They've maintained their buying rating with a target price of rupees 1,513. They believe that the relaunched brands such as Royal Challenge and Signature have driven the overall performance, growing about 19% and 16% on Y-on-Y basis, both respectively. And also, they are expecting recovery in antiquity in 2024 as the brand is set to relaunch again in 2024. Now, if we talk about Radico Khaitan, they have maintained their buying rating and hiked the target price to rupees 1,996. They say that the company have outperformed its peers with their millionaire brands, which is growing about 7% on year-on-year basis. And even if you look at the 4-year CAGR of Radico Khaitan, they have outperformed their peers with a 7% CAGR growth. Now, the opening of new restaurants and bars have also led to increase in their volumes to up to 6.2 million cases, which is an increase of about 29% year-on-year basis. So overall, very positive on the alcohol space as it continues to grow on the lead with premiumization, and Radico Khaitan and United Spirits are the top picks.
Okay, surely keeping an eye out on that. But let's move on. And Aditya, you picked out Sobha from the real estate pack. Real estate surely has seen a bit of an uptrend coming there, but today Nifty Realty is a bit down and out. So what is the view now on Sobha? Where should we be seeing it headed? Do you think it's time for some profit booking here?
Absolutely, it's time for profit booking because after a superb run from 1550 to levels like 2200, there's good amount of profit taking, and in fact that's happening with a gap down. So I think good time to be neutral to little bearish on this counter and not be aggressively bullish or be a blind bull on this counter. There are other reality players which are doing pretty well, but time to be little neutral to bearish on Sobha.
surely keeping an eye out on at that. But let's move on to the next stock and one more block deals. I've taken a lot of block deals today, a lot that happened today in terms of block deals, so cannot help it. ZF Commercials is the one that we are talking about, and ZF Commercials, what we understand is that actually there was a big block deal that happened today. 1.43 million shares were traded in a block deal, 7.5% change of equity hands. Now what we understood is that the promoter WAPCO Asia is actually the seller of the shares. So yes, that 14 lakh shares or 1.43 million what we talk about, that is likely. Sources of what we understand is that WAPCO Asia is the seller. That's worth around 2,200 crores. So keeping an eye out on that. It was at a discount that they've made the stake sale is what we are understanding. So that is why the stock is a bit subdued in trade. But post this, the stake sale will be at 67.5% for WAPCO Asia. Keeping an eye out on that. Who are the buyers of that is something that one should be keeping and watching out for. But yes, what we understand is that the seller is WAPCO Asia. But I do quickly want to mark the Nifty Bank as well. Seems like a bit of a recovery is again come back for the Nifty Bank. Let's pull that chart up and see what Nifty Bank is doing. 51,425 is what it is trading at. Up 2% as of now is what the Nifty Bank is trading at. And like we mentioned before also, all those private banks are the ones which are leading the gain for the company. So Nifty Bank, yes, trading quite high, and at one point of time it was at those record high levels. So keeping an eye out on that. This is also, I beg your pardon, this is the record high level right now what it is trading at, also around touch that mark over there. So keep an eye out on Nifty Bank. Surely flying away in trade, Ankita, that one, no stopping that today, right?
Absolutely no stopping for Nifty Bank today. In fact, look at Nifty, and if you compare it to Nifty and the broader markets as well, and compare it to a Nifty Bank, there's no stopping for it.
It's
right?
shining bright today.
It's shining bright today, absolutely. See, Nifty is absolutely flat right now, but Nifty Bank soaring away with gains of 2%. But moving on, coming to you, Aditya, Moscow Docs, another stock, another pack that is shining away, the defense pack, Moscow Docs. In fact, today it's you can see a bit of a profit taking coming in Moscow Docs, but this stock has been surging and the entire pack has been in focus for a while now. Is this time to book profits now?
There's a time when one should take chips off the table. These defense names have run up quite a bit, and we have seen almost parabolic rise in all these defense counters. And recently also, since March, we have seen MassDoc run up from levels of almost 1,800 to 4,200. So given more than 100% return, so one cannot rule out profit booking over here, and this is the good time to actually book profit and take home the profits, because there could be further correction of 10 to 30%.
Okay, surely keeping an eye out on a Moscow Doc. Ankita, those defense names, shipbuilder names,
Absolutely.
all of them are just pretty. With the banking space, that's something else that is also pretty in trade.
Right, but as Aditya says, now it's time to book profits.
Maybe, yeah, it's clearly time that one should actually start seeing
Absolutely.
the run-up that they've seen.
The scene is crazy. But moving on to the other counter that is in focus today, and that is Tata Technologies, that has partnered with Microsoft and Tata Motors to drive innovation with the Innovent hackathon for engineering students focused on generative AI. So on the back of that, Tata Tech is in focus today. In fact, it has cooled off from the 0.5% gain that we were seeing in the morning, is now trading with cuts of 0.4%.
Okay. Keeping an eye out on Tata Tech, but jewelry stocks today are there in focus. Not shining bright, at least Titan, Jinay. What's the word coming in overall for the jewelry stocks? Why have you picked them out?
Well, as the City came up with a note on Indian consumer and retail space, they have said that many stocks have outperformed in the consumer and retail space. Majority all of the stocks, despite their EBITDA downgrades. Now they do not expect demand recovery until the H1 of this fiscal, but they do see further downside risk, especially in Titan, and that is why they have come up with a 90-day negative catalyst watch on Titan, and the catalyst being the earnings announcement. Because if you look at Titan's earnings, they believe that they have been before the consensus estimates in 3 times out of the last 4 times of earnings. Now also Motilal Oswal came up with a note on jewelry stocks. So they have come up with a buying rating on Kalyan Jewelers with a target price of Rs 525. They believe that this company is one of the largest retail chains in India, and they've modeled a PET growth of about 41% CAGR from FY 2024 to FY 2026. Moving on, they have also come up with a buying rating on Senco Gold with a target price of rupees 1300. They believe that this is one of the most promising stock in the organized retail jewelry space, and they have modeled a PET growth of about 26% from FY 2024 to FY 2026. And lastly, they have reiterated their buying rating on Titan with a target price of rupees 4150. They believe that they are bullish on Titan because of the outperformance from the superior performance over past years through their peers, and they've modeled a PET growth of about 25% over fiscal 24 to fiscal 2026.
Okay, that is Titan, Kalyan Jewellers, Senco Gold, all of them in focus. But let's move on to the next one. And Aditya, you picked out Suntech Realty also. So should one start booking profits here as well today, because that's also a Realty pack name?
No, this is the flip side of the story, and it's really outperforming. So it's completely opposite to Sobha. It is plus 7% today, Suntech Realty. And probably today the theme in the market is money rotation. Money is moving from, let's say, defense counters to private banks, which are doing pretty well, which is lifting Bank Nifty. And again, within a sector, we are seeing money rotation moving towards, let's say, to Suntech. The stock is plus 7%. I think there could be more upside over here, or there's scope for little more outperformance compared to the reality space as a whole, and to compared to peers. So this looks like an outperformer.
That is Suntech Realty, but moving on from Suntech Realty to pricier thalis. Brace yourself for a pricier thali. The cost of green vegetables has skyrocketed with prices soaring 30 to 50% in just 1 month. From the humble tomato to exotic veggies like broccoli and zucchini, everything seems to have gotten pricier. Astha Chopra, my colleague, is at a vegetable market to understand why the rise in prices and what the wholesalers are pricing in.
Well, we are stationed at Dada Market today talking about the Indian thali, talking about the vegetable, the food inflation, starting with tomatoes, which is the essential ingredient of the Indian thali, which goes up to rupees 100, which was before 30 rupees kgs only. Last month it was 30 rupees kgs, and now it's been sold at the rate of rupees 100. Talking about onion as well. Onion also skyrocketed. It is selling right now at the rate of 40 rupees per kgs, and now it's 25 rupees of kgs. The next essential is potato, which is now selling at 30 rupees per kg, which was earlier 20 rupees per kg. Talking about all the vegetables, the vendors and the wholesalers, they are saying that the green vegetables have been affected the most during this food inflation time. Most of the states in India have experienced more than 40 degrees Celsius of temperatures and have exceeded 45 degrees as well. So most of the crop has been destroyed in the severe heat, and the supply chain was also very poor during this time. The rainfall was inadequate. That's why the crop are really bad. Talking about the luxury vegetables in the Indian thali, starting with broccoli. Broccoli is the most expensive ingredient in the Indian thali and in this mandi as well. Coming to the cabbage, this is the colored cabbage, which is selling at the rate of 120 rupees per kg, which was earlier 80 rupees per kg as well. Mushroom, lettuce, capsicum, every each of the vegetables saw an increment of nearly 50 to 60 rupees in the Indian thali. This is the most impacted vegetable, the luxury item in the vegetable thali. This is impacted the most, especially the green vegetables. As we talk to the vendors and wholesalers, they are saying that the prices will be continue to rise till July.
Absolutely, keeping an eye out on those vegetable prices. But with that, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back. You're tuned into Market Fatafat, where we are telling you all the stocks that are in focus today. Let's move on then. Financial space is what is in focus today. In fact, we can see the Nifty Bank soaring away in trade today, trading with gains of over 2%. 51,531 is where it's perched at. But financials are also in focus today on the back of the fact that Bernstein has come out with a note, and it has come out on a note in Bajaj Finance, IndusInd Bank and Muthoot Finance. Bajaj Finance, they're initiating a market perform with a target price of 6,800 rupees per share, or IndusInd Bank, they've initiated an outperform with a target price of 1,800 rupees, and Muthoot Finance, they've initiated an outperform again with a target price of 2,000 rupees. And they feel that the Indian banking sector remains in good shape, and also the fact that strong credit growth, benign asset quality and healthy margins continue to play host to some great compounding stories is what they're saying. Also, Bajaj Finance, they feel that they see healthy growth ahead, but see room for consensus earning cuts given several headwinds. For IndusInd Bank, they feel that it is well positioned for a potential rate easing cycle and has high exposure to attractive segments. And for Muthoot Finance, they see long and shiny road ahead for gold loans, and Muthoot is the best play in the segment is what Bernstein is saying. On the back of that, we can see all three counters in focus today. In fact, IndusInd is trading with gains of over 1%. And on Bajaj Finance, we can see a bit of a profit taking. It is seeing a cut of 1% right now.
Surely keeping an eye out on that. Let's move on and talk about DCM Sri Ram then on the technicals. Aditya, what is the word coming in for this one? We have seen that today surely the stock is buzzing away, but last 6 months has not done pretty much anything. So what's the view now?
Vinny, not only DCM Sri Ram, but a lot of sugar counters haven't done well since last many weeks and many months. But now recently, in last 1 month or so, there's good volume participation in all these counters. So that suggests that institutions are getting interested in all these counters. So DCM Sri Ram is one of those counters where there could be a fresh leg of rally. So one can buy this stock at 1049. Stop loss must be 1000 and target should be 1100 to 1200.
Okay, surely keeping an eye out on that. Let's move on. Talk about Prestige Estate. The shares of the company dropped, as much as 5% at one point of time. And what we saw was this mainly happened as it plans to raise capital through the qualified institutional placements, preferential issue, right issue, any of the methods that possible. Additionally, what they also said that the board will also consider monetizing its hospitality segment. This is through issue of shares. Now, the issue of shares could be done via the primary method, secondary method, or both as well is what they may be considering, and this will be done subject to the approvals that is required from the shareholders, as market as well as the board members. So yes, on the back of that today, Prestige Estate seems like a bit under pressure, keeping an eye out on that one.
Alright, moving on, Jinay, you have picked out Ixigo for us. It's a newly listed stock. Tell us why have you picked out the stock?
Well, it's the second day for the company, and if you look at the company's IPO information, the issue price was at rupees 93 and the company got listed at a premium of about 49% at 138. Now, it not only stopped there, but it further went on to increase about 20%, giving an upper circuit and giving a close of about 165.72. Now, there are some bulk deals which you need to note of, which is Nomura have bought around 65 lakh shares on the listing day. Also, if you look at other anchor investors who are investors in this company, that the names include Nomura, Morgan Stanley, HDFC Mutual Fund, Motilal Oswal, among others. And if you look at the stock is trading at about 189 rupees, which is about a return of 100% when you compare to its issue price.
Okay, surely keeping an eye out on Ixigo, just listed yesterday, but look at the move continuing today as well.
Absolutely. But moving on, even consumer durables are in focus today. In fact, I know the summer is abating and it's giving way to monsoons, and so there is a note that has come out by Goldman Sachs on consumer durables. Crompton Greaves, Havells and Voltas are the stocks in focus today. In fact, they're maintaining a buy on Crompton Greaves and they've hiked the target price to 450 rupees per share. Havells also, they're maintaining a buy and hiked the target price to 1,900 rupees. But on Voltas, they're maintaining a sell and they've hiked the price to 1,200 rupees. Now they feel that on a Symphony, I beg your pardon, they maintain a neutral and they've hiked the target price to 1,160 rupees. And they feel that strong summer with temperature levels much above the normal has driven strong demand for cooling electrical products in Q1, and the demand for air conditioners, fans, air coolers has seen some significant uptick in both the primary and the secondary market. markets, and also Q1 margins are likely to witness an uptick driven by better operating leverage and lower discounts, and they now expect a 30% growth for ACs in FY25 versus the 15% growth earlier. And on the back of that, Havells, Crompton Greaves and Voltas are in focus today.
Absolutely, surely keeping an eye on all those stocks today. But with that, we're absolutely out of time on this edition of Market Fatafat. So thank you so much, Aditya, Janai, for joining in with us on the show. And with that, viewers, it's a goodbye from Ankita, myself, as well as the team who put the show together. But listening to what the top market voices had to say in terms of their opinion on the risk that is there in the F&O segment in the market. Listen.
I do hope the retail investor gets to be in the long-term category as opposed to the trading category, which of course is happening through the SIP route. So it is happening through the SIP route. But individual retail investors, from what I understand at least, is pretty gung-ho on F&O trading, option trading, because of the tax incentives are lined up there. I think that's probably a bit short-sighted of them.
Some of the riskiest instruments like derivatives, small investors should stay away. Sure. And they should be kept away so that it doesn't bring basically a situation where small investors can get hurt.
India real estate is 50, gold is 12, equities is single digits. There's no peak participation. In fact, I don't see that widespread ownership as yet. I think it is going to come now. And don't see it by number of people, see it by the exposure they have. What percentage of their balance sheet is in stocks? Right, we have achieved breadth in the last 7-8 years thanks to a lot of work done by the government, the regulator, the mutual fund industry. Hats off to all of them. They've achieved breadth but not depth.
If you like this video, then like, share and subscribe to ET Now.